Welcome to the play call for today on this Monday. We're going to get right into some charts. I want to show you guys some charts. So number one, what we're seeing is Bitcoin is starting to decline, right? So if we flip over to the 10-minute chart here, we can see that you just had a pretty sharp decline on Bitcoin. To me, that's not a surprise. If you've been paying attention to what I've been saying, we know that Bitcoin was right into major resistance. Take a look at the lowest point since the bull market M top here that was in kind of the May to June period right there. It matches perfectly with this low and it goes right there. So that tells us that that level is resistance. There's a ton of resistance right there. So to see price pulling back, you have to expect that. As much as our hearts and our guts want to say, oh, it's going to break out, reality is charts are in charge here. Resistance is resistance. What you're going to look for, first support is going to be right here at this high. That's around $25,000. I expect a $25,000 retrace from this level of around 27 now. We were at about 29. Let's go to NVIDIA, guys. This is a chart I had posted on Twitter. I hope you guys are all following me on Twitter at Gareth Soloway. The bottom line is, look at this trend line going through here, all these lines here. This was a beautiful little head and shoulder pattern breakdown. We've now retraced, and I said once we hit this level, we were going to fall back down. NVIDIA is starting to fall back down. You're looking for a retrace to at least $240 from the current price of around $265. Lastly, I got to touch on this one. This one's a big one, guys. This is the chart of the S&P going back to the 80s. What you can see here, this was the dot-com bubble, okay? This was the dot-com collapse. This was the real estate bubble. This was the financial collapse. Look at what we've been in. Now, if you're like me, this scares the shit out of me, because what this tells me is that compared to these previous bubbles, with the Fed printing the amount of money they have printed, we have created one of the biggest bubbles, if not the biggest bubble in history, and that means that the unwind is going to be nasty. What we're seeing right now, guys, is nothing. If I'm correct, this has a lot more downside to go. We're talking about over the next couple years, a definitive recession, something that lasts even multiple years, and you're going to see asset prices collapse down significantly. Worst case scenario would be going back to this double top high. The S&P would be back to sub $2,000. Now, again, that's a worst case scenario. I'm not going to call for that at this point, but you have to be realistic and say, okay, if this is the bubble and we saw the bubbles over here, then in the very least, we got to come down probably to about 2,500 on the S&P 500. Now, remember, this doesn't mean we freak out. This doesn't mean we throw up our hands and say, oh, we're all screwed. From the best collapses comes the best opportunities. Think about if you bought down here. Here was your COVID low. Think about if you bought down there. So when you get a collapse, have money on the sidelines, react, buy, ignore emotion, get in on those chart levels and make money. Have a great rest of your day, guys.